Joining me for a look at the equity space is Nick Kunze from Sanlam Private Wealth. Thanks so much for your time, Nick. The markets have actually been in a good mood this week, and I'm not sure if that is just thin trading because of the shortened week from the US, or if markets are actually really coming back and the bulls are coming back, trying to get everything at this point.
Well, yeah, normally the last couple of shows I've done, I've normally picked like a dire day. So it's actually quite nice to join you with some green on the screen. I think a little bit of maybe there is a bit of a thin market. It's Thanksgiving, as you said yesterday, and it is a half day in the States today. So I imagine most traders probably taking a long weekend. But nevertheless, lots of earnings, lots of decent PMI numbers, a cheaper oil price this week as well, a little bit of a stronger rand, Reserve Bank as well. So lots to talk about. And I think in general, fairly positive news flow, which explains why there's a little bit of a bid in the markets.
Well, actually, let's talk about that Reserve Bank, because they kept interest rates on hold, even though we did get that CPI print for October in on Wednesday, actually with an uptick from 5.4% to 5.9%, and before that it was at 4.8%. So really looking like headline inflation is going up, but seeming that the Reserve Bank is not bothered by it.
Look, I'm sure you probably watched the press conference. I mean, he was, as usual, hawkish self, more so than most, I thought. And I guess, as you pointed out, that inflation print the day before, the band is 3 to 6%. We're knocking on the top of that 6% now. So they must be a little bit concerned, although when you listen to the economist, it was majority food inflation, which we do know is quite volatile. So, but yeah, I guess the general feeling is, thank you just before Christmas, no interest rate rise, but a little bit of a warning sign. We're not out the woods yet, and I think that's central banks globally as well, also in the same camp.
Yeah, is that what you got also from the Fed minutes? Because they actually said that they aren't thinking about hikes. Meanwhile, the markets have been thinking about hikes since they last cuts rather, since their last meeting.
Yeah, I mean, amazing. In a few months, interest rate hikes were on the table. And now if you look at the Fed sort of implied futures fund rate, which is where you can see with what traders are thinking, majority of Wall Street thinking there's cuts coming in the first quarter. So a real, I think if there's one thing that sort of summarizes the Fed and the market the last few years is the real disconnect. The market saying one thing and the Fed trying to do the other way. But in my experience, the markets are usually fairly efficient. So let's hope there's some cuts coming.
All right. Actually, talking about the markets, Nvidia coming out with results this week, and the question with Nvidia is always, can they maintain this momentum? And they really did. And even for the next quarter, their forecasts are actually even more than the growth that we saw in this quarter. Is this just one of those that's just going to keep on going higher and higher and higher? And are we going to get another bubble?
Oh, such a difficult one. I mean, this is the poster child for AI. I mean, AI, which is the exciting things that are happening in the future. NVIDIA supplies all those chips, and until there's an alternative, Microsoft and Apple both spoken about developing their own chips for AI. But until that comes to fruition, this literally is NVIDIA is the only game in town. Those numbers were a blowout. The stock is up, 250% already this year. Another blowout set of numbers. Interesting enough, though, the actual stock price was actually down a couple of percent the morning after. That was Wednesday morning. So, difficult to see what the next leg up is going to be, and it is expensive, it must be said. But for now, continuing to deliver in quarter on quarter.
Yeah, and I really don't blame investors for trying to take their profits at this point. Well, talking about companies going higher and higher, Mr. Price, we also did see investors reacting positively to their results yesterday. That share price was up over 10% yesterday. Yeah, they released results where top line growth was about 27%, but of course we did see a decline of about more than 9% in the bottom line. Quite a lot going on there between that top and the bottom line. Just your take on that, the headwinds, the opportunities. Yeah, what did you take from that?
Yeah, Mr. Price, they were quite noisy, a lot of line items to digest, as you said.
Yeah.
But the outlook I thought was surprisingly positive. There was, of course, and I must say, the first time we're so used to seeing questions of diesel generators and load shedding during the earnings calls.
Yeah.
First time I've had a comment about a Transnet and the port. Logistics, which is a bit of a concern, but they say they're ahead of it. They've got more than enough to deal with, more than enough stock coming to the market. Outlook was surprisingly good, and also must be said, Mr. Price is quite a different company than it was, let's say 4 or 5 years ago, where majority of Mr. Price's apparel was imported. They do quite a bit of manufacturing on the clothing side locally now, which is a positive for everyone, and is a positive you don't get those currency fluctuations as well. So I think almost a better run company, I think. They seem to be getting ahead around a lot of things. And again, reflecting the share price, really nice positive move. I think at 1.12% up on the day. So take a bow. Nice set of results.
Yeah, and really just on a Transnet, really quite discouraging to see the challenges they're permeating into the retail sector as well, more sectors other than the mining sector. So yeah, they really need to fix those problems on that front. Let's go into another retailer, Spar. They came out with an update this week saying that I think they said that their numbers are going to be worse than they had initially anticipated. And of course, there's some costs to do with Poland as they're leaving that country, but also some challenges in Ireland as well. Lots of challenges even back at home with that SAP, that SAP implementation. Are the headwinds at this point just... is there no clear end in sight for those big headwinds that they have been experiencing over at least the past 2 years, Nick?
So Spar's had a little bit of bad luck, I think, and I've yet to find a single company that talks about an enjoyable experience implementing SAP, but I'll leave that for a conversation for another day. But yeah, that's costing them. They do seem to be up against it a bit, where the other retailers have spoken reasonably positively. Spar, I think it unfortunately where it did really well during during the COVID pandemic as well was a lot of the customers were shopping local. Literally just driving up the road. It suited the likes of Spar quite nicely. But, I think as things have opened up again, they're not getting that sort of tailwind at all. And also, I heard some analysts talking about Spar, sort of, where do they actually kind of sit in the value chain as well? A little bit of an identity battling there as well. Though I will say it is cheap, around 111, 112 Rand per share. Those investors looking for a little bit of value, I do think it offers value at these levels.
All right. Quickly before we get to your stock pick, Telkom and its moves into becoming an infrastructure company, now saying that they will be selling Swiftnet, that Mass and Towers business. Do you think that Telkom at this point is on a better footing?
I think there's another one. I think is a little bit of an identity crisis. I'm not sure it quite knows what it wants to be. Although interestingly enough, the last set of results that have come out the last couple of quarters is the first time profitability on their mobile line is now greater than the actual fixed line business. So they have transformed themselves. I think they're much leaner, better run business, definitely, but not quite sure. They had this for sale sign around their neck for a while. They seem to be always looking for a potential bidder. Whether the government or the PRC as large shareholders allows that is another answer, quite frankly.
All right. Well, let's get to your stock pick for today, Nick. What are you hanging your hat on?
Okay, so we've I mentioned a few times as Glencore for a number of reasons. First and foremost is they are almost 20% of their profitability is derived from trading commodities, not necessarily just digging it out the ground. So this volatility in the commodity market suits them perfectly. And then about a month or so ago, they finally bedded down that Canadian company Tech Resources, which is going to change their cash flow massively. The free cash flow gets a lovely hit after this deal. And as you saw with Sibanye a few days ago and a few other companies in our space, they're trying to trying to shore up their balance sheets. But this deal for Glencore puts them in a nice space, and I think around these levels, it's round about 105, 106, definitely offers good value.
All right. Well, thank you so much for your time and for your analysis on what has been happening throughout the week. Nick, I really appreciate it. That was Nick Kunze from Sanlam Private Wealth.